The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 13th. Wonderful Wednesday edition of today's Trader's Edge Show. I'm your Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of these markets, what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to call on in. Now it's not too soon. 877-927-6648. Of course, internationally, 727-445-1044. Would love to hear from you. So go ahead, give us a call. Let's go ahead and get this show started on wonderful Wednesday. Of course, this is the Hotel California, sponsored by none other than Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have a flat market out here. You've got the Dow up 14 points. She's trading at 18,361. S&P back 1 point at 2050. NASDAQ Composite down 7 at 50.15. Russell 2000 off 3 points. She's trading at 12.02. Gold's up $8, trading at 13.43. Silver's up 24 cents, trading at $20.41. Silver just won't give it up. You've got light sweet crude back $2 now, trading out at 44.74. Leading the charge here to the upside, you've got Chipotle up $9 and change. You have AEP Industries up about 6%. That's $5 and change. Imprivata, IMPR, that's up 31%. That's up $4. Allergan up $4. Ocean Shore Holdings up 26%. Interesting. Maybe we'll take a peek at that. We didn't really look at any individual stocks yesterday, so we may do that. Maybe spending some time on that today. Of course, you can always reach out to me if you can't call in. You can send me if you're in the den, just an instant message, and I'd be happy to get to whatever it is you're looking for. You can send me an email, steve@tfnn.com. I'll try to get to anything and everything. Lead the charge here to the downside. Acuity Brands, AYI, that's a ticker symbol. That's off $6. GW Pharma down about $6. Avenger down $4.56. Stamps.com down $4. But where do we begin? With a quiet market like this, where should we begin is really the question. I think the best place is, let's go take a look at some intraday charts. Let's look at some 30-minute charts, see if we can get a sense or a feel for what the market may or may not be trying to do out here. Let's start with the NQ. So let's look at the 30-minute chart here for the NQ. When I look at this chart, the only thing that sticks out to me is just that this has been in really a sideways consolidation here, you'd have to say, since about 3 o'clock in the morning on July 12th. So the last couple of days. And that consolidation pattern would look like this. I'll go ahead and put a little rectangular box around it. It's not a perfect consolidation, but in essence, that's what the market has been doing. We can stretch this out. Now, the beauty of this is that regardless of whichever way this breaks, either to the upside or to the downside, would give us a fairly decent price projection as to where it's a measured move is what we refer to it as, or what I refer to it as. And so all I have to do is take that consolidation zone, draw another box. It wasn't a perfect box. Rectangle. So to the downside, if this breaks to the downside, we'll look at both sides of the trade out here. Well, we were going to until the screen went blank. There we go. Let's see if we can look at both sides of the trade. So to the downside, you're looking at a pullback in the 45, 39-ish type range out here. To the upside, Well, I might have a more difficult time doing it to the upside. No, there we go. I just had to really scrunch it. That is also a technical term. I'm sure you're familiar with that technical charting term, scrunching. So to the upside, you ought to take a look. The NQ ought to move up to about the 4,600-ish type range out here. No indication when I take a look at this chart as to which way this might want to break out here. Just a sideways consolidation. So not much left for us to take a look at inside the NQ on the 30-minute basis. Let's just step this down just a tad, and let's go take a look at the 120-minute time frame chart and see what we have out here. On the 120-minute time frame chart, the most valid pattern, let me turn off a couple of things. One thing out here. Give me a second to do this. It's just going to clean up the chart just a tad for us since we don't need it at the moment. There we go, just a tad cleaner. Yeah, and it really is just a tad cleaner. So the one pattern that is out here is an A to B equals CD to the upside that has not completed. That gives us a price projection of 46.52. So that was 46.52 versus we were at about 46.01. So a fairly decent difference in price range to the upside if, in fact, this continues to move higher. Now, you can't really see it that well here. Let me turn off the A to B equals CD. I have to turn off a couple of things. But price has been moving high. Well, good Lord. What did I do there? There we go. Price has been moving higher with less relative energy. And we did get a nice little key reversal session out here. Let's do this. Let me switch to a different chart. Let's go to the 120-minute time frame here. That way you'll be able to see at least that little key reversal session that occurred. And it occurred right at the top of a TAS market profile. That's this session right here that took place between 8 and 10 o'clock in the morning. See how the prior candle was a doji, by the way. See how the high of that prior candle and the low of that prior candle was taken out. So we really have a confirmation on the 2-hour chart that price wants to move lower. But if that's going to happen out here, and this chart here is showing us market profiles for both a 2-hour and a 4-hour time frame out here, what we're going to have to see is a close below the high of that 4-hour and the low of the 2-hour. They're basically about the same level, right around the 45.62 area. So the area to be watching inside of the NQ, we're going to call it 45.62 to the downside. To the upside, it's going to be it's going to be above 45.82. So that's the levels to be watching inside of the NQ. If we go take a look at what's going on inside of the ES Mini, let's do the same thing out here. So let's look at the S&P futures contract. Let's look at the 30-minute chart, see what this shows us. Now, on the 30-minute chart, this made a nice move higher out here with less relative energy at 9 o'clock this morning. So we saw that nice pop up into the equity futures contract. And then when the actual equity, cash equity markets opened up, we started to see a sell-off nearly right away. Now, what we have out here at this stage, a level of resistance, should be a level of resistance inside the ES Mini. If this is going to be anything more to the downside, the ES Mini ought to find resistance at about 2146 is what we'll call it. You move above that, then what you're looking at is move up to about the 2149 level. Now, on this 30-minute chart, let me just switch over here to the black background chart. I just want to confirm that, in fact, a brand new profile formed just as we were coming on the air out here, and this one is definitely going to be more accurate, and it did. So on a 30-minute basis, now what I'm going to do here is I'm going to turn off price because it does have an important meaning for us, and we'll try to do this as we're going into the break. So I'm turning off price, and what you can see is that brand new profile that just formed as we came on the air has formed at a lower level. Of course, it says 2142 should be strong support, so you break below that, that'll be sending us a message that the retracement is fully underway, at least inside the ES Mini. This is Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee.
See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We've got the Dow. She's up 13 points. S&P is off about just a little bit less than a point out here. Let's go to Jim in Oldsmar. Jim, thanks for calling. Thanks for holding. How are you doing this afternoon?
Doing great. Thanks for taking my call.
Sure, my pleasure. Now, you want to take a look at the energy sector for the S&P 500, the XLE. Tell me what you're doing, how I can assist you.
Well, I was looking at the XLE and ExxonMobil and wondering whether it would be better to buy ExxonMobil by itself or buy the XLE. I know there's a lot of them in the XLE that are down over 2%. So I was thinking maybe I should just buy ExxonMobil. I'm looking at kind of a mid-term investment, not necessarily just a trade. And I don't even know what I would be a good buy point on a pullback for like the XLE or Exxon.
Well, let's see if we can try to answer all those questions. So what I'm going to do here right now, folks, if you're watching us on TigerTV, I'm going to go ahead and in one portion of the chart, we're going to have the XLE, and the other portion of the chart, we're going to have ExxonMobil, XOM being the ticker symbol. I'll go ahead and use candlesticks on both. Now, inside the XLE, Jim, I don't recall off the top of my head, but ExxonMobil used to be and probably still is the number one weighting inside of that ETF. So, so with regard to, should you buy one or the other, and it used to be a really significant weighting. Maybe I can actually find out right now. Let me see if I can find out for you real quickly by typing this in. Let's see if it pops up on my screen as of yesterday's day. Yeah, so ExxonMobil, Jim, represents 19% of the energy sector, the XLE. Chevron is 15%. So between the two of them, we've got 35% of the entire energy sector. To round out the top five, you've got Schlumberger, which is 8.5%, Pioneer Natural Resources 4%, and EOG Resources is another 4% out there. So the energy sector really weighted to just a few individual individual stocks out here. And we can see when we go ahead and we put both of these on the screen, we can see how they really move, not necessarily tick for tick, but they really do move in synergy with each other. So the question then that you're asking from an intermediate term trade, which one is the better one to purchase? I guess first would be your take on the overall energy sector itself. Is your take that this thing truly did bottom out back here in the early part of January, and that's why you're looking at an intermediate term trade?
Right. Uh-huh.
Oh, okay. So here's another thing that we'll do. We'll take a quick peek here, then we'll try to answer your question here. This next chart that I have on my screen is the energy sector. That's on the top portion. Now I've got a line chart on the bottom, and that line chart is light sweet crude. So what you can clearly see here is the correlation between the movements inside the energy sector and the movements inside light sweet crude. So the next question I would pose to you, are you also taking the position that we have seen the lows in light sweet crude that occurred also back around the January 20th to February 10th timeframe?
No, I think from here it's probably going to go a little lower, but I'm thinking intermediate term it'll probably go back up to about $70 a barrel. Some of the calls out are, there's quite a bit of call activity out in for ExxonMobil, and I was just thinking, and for XLE, I think. So
yeah,
I was thinking long term, while it may go down some, in the short term, it may be an opportunity to buy pretty soon if I knew what the entry would be, and then it would probably go back up to about $70 a barrel, maybe by the first of next year.
Sure. So by taking a look at these two charts here, to answer your first question, is it better to buy the XLE or ExxonMobil? I think that's that's a toss-up. That's a flip of a coin. I don't think it would matter significantly when we take a look at just simply price movements out there. When we take a look at XLE and we take a look at ExxonMobil, we know that it's going to be controlled. Who's the dog, who's the tail? I would say that more likely than not, it is light sweet crude. So the position that you would be taking inside of either ExxonMobil or the XLE is going to truly be biased based upon your belief about what light sweet crude is going to be doing, and you've got to be paying attention to that. So now, first with regard to an entry point inside, which one do you want me to use, XLE or ExxonMobil? Which one are you leaning towards more?
ExxonMobil.
ExxonMobil. Okay, perfect. So we go take a look at ExxonMobil, and we try to find, and if we just simply disregarded, which we won't totally do, if we just simply disregarded movements inside of light sweet crude, your buy point inside of ExxonMobil, the first buy point is going to be up at about $90.46, and you are at $94.48 right now. No idea whether we'll get there. What I'm using as a price target there is our TAS weekly profile, 90.46. The daily profile is up at 89.09. Until new profiles appear, those would be the numbers that I would go with. I don't see any real significant breakout or breakdown inside of ExxonMobil to use as a level where price would pull back to necessarily. That didn't help doing that. But that would be the price area that I would pay attention to. Now, what you and I need to do, and let me just put this, since you're talking about intermediate term time frame, it would be foolish of me not to put a weekly chart up on our screen. So let's do that. Now we've got more data to use, and let's just take a look at retracement so we can get a feel for where we're at. Retracement from its high back in 2014 in July down to the low out here in August 2015. Now, what ExxonMobil ought to do is, assuming that there's no real reversal here, it ought to make a move up to about 96.58. Jim, at 96.58, that's going to be the 0.786 retracement. Now, we take a look at these retracement levels kind of like elevator floor, like floors in a building. And when you get above one floor, which in the case of ExxonMobil, it certainly did it with conviction, just simply via the wide-ranging bar the week that began, June 27th, it would suggest to us that this is more likely than not going to hit 96.58 out here. So that's what the weekly chart is showing. It's not showing anything different with regard to where price might pull back to. Now what I think you and I need to do is go take a look at light sweet crude. So I'm going to pop open a 30-minute chart here for light sweet crude. If you were listening to yesterday's show, I believe it was Brent in Martinez, California, that was calling about light sweet crude, and as we were going into the break, he had to hang up here, but I had popped this up on the screen and said, hey, light sweet crude looks to me like it's getting ready to top from a short-term standpoint because it was moving higher, doing it with less relative energy. We didn't have any kind of bearish reversal signal. That didn't occur until 3 o'clock in the afternoon, and then we continued to see some follow-through to the downside. Now, light sweet crude was really strong it has been really strong, but what's interesting on this 30-minute chart here is if I just simply take a look at wave counts to the downside, it's extended itself beyond that 7th wave move, and you don't necessarily like to see that. That's an indication that there's actually more retracement to come. We haven't necessarily seen that in the XLE. Big time, not as much as we have in this little fall here for light sweet crude. But the 30-minute chart, other than making a 100% move and getting back here to this time frame from about 4 o'clock in the afternoon on July 11th, there's nothing here that indicates that it's going to stop its descent. So if you hang on through the break, that's what the 30-minute chart is showing us. We're going to go take a look at the daily chart and try to get a feel for where light sweet crude is likely headed to so that you can time your entry into the energy sector or ExxonMobil. All right, my friend?
Yes, thanks.
All right, we'll be right back with Jim in Oldsmar, Florida. This is Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Oldsmar, we're taking a look at the correlation really that exists between the energy sector, ExxonMobil, which is a significant portion of that, and light sweet crude, so that Jim can try to time an entry into an intermediate term position into ExxonMobil. So, Jim, the chart that I have up on my screen right now is the daily chart for light sweet crude. And the price level that you want to be paying attention to, here's what we know about light sweet crude right now. The current contract. It is trading below its both its TAS daily and weekly profiles, which then therefore has kind of a bearish tone to it. Now, the most recent profile, the daily, formed yesterday, and it formed at a level lower than the prior daily. That's the blue lines that are going across my screen out here. And the bias of this brand new box that formed with the support at 44.94, it's really a bias to the bulls out here, to the buyers, because this little point of control is closer to the bottom of that box. So that says that that price level of 44.94 is really important. But I'm going to use the actual low of 2 days ago, July 11th, which is 44.42. If we see light sweet crude move below that area, and at this stage here, there's only one thing that says that that might not be a possibility, and that was yesterday's candle formation. So 44.42 is a key level of support. But if that gets broken out here, then where light sweet crude ought to make its next move to is really on that next floor to the downside in its elevator, which is your 0.618 retracement level, which is priced out at 39.88. So it would be at 39.88 where I would be looking for some type of pattern to form in light sweet crude. That's assuming that it breaks below the candle session from a couple of days ago. And then at that stage, I would go over, I would take a look at ExxonMobil, see what its patterns look like, see what volume looks like, and then that's where I would consider taking a look at a longer-term entry. But at this stage here, light sweet crude is not really looking that good as we speak. It's broken through a nice little rising trend line. The bulls came out in full force yesterday, but the sellers are back in control as we speak right now, and it's just a matter of whether or not it's going to break through 44.42. So that would be my take on when you would next look for a potential entry into ExxonMobil or the energy sector. How does that sound?
Sounds good. I also thought that oil was going on down a little lower before it, and I thought before it goes back up again, and I'm thinking that, well, I'll get in when I think oil's down and Exxon's down, and then just ride it for a while. I'm thinking that by the first of the year it could be high 60s to $70 a barrel, so I didn't know.
Yeah, one of the things that it did 2 days ago, which was really bad news for the bulls in light sweet crude. If you watch us on TigerTV, you can see a blue line at the bottom of my screen. Actually, let me update that blue line out here, because I see I have something that looks like it was turned off, was waiting for a bar to complete. There we go. So now we can see it here. And you're going to see a few lines. But this is referred to as the price oscillator, the very bottom portion of my screen. And when the price oscillator dips below zero, price oscillator in this case here, it's the difference between two exponential moving averages, the 19 and the 39 period exponential moving averages. When price is falling, when the price oscillator is below zero, that's when things can really start moving to the downside. When the price oscillator is above zero and it starts to decline, as it was back here when it made its top. And by the way, when it made its high out here, just of interesting note, from the trading session of the day of April 5th all the way to the high out here on June 9th, it made a nice little seventh wave move. Those seventh wave moves are really important in strong markets. You know, like we were taking a look at on the 30-minute chart, it should have held. It didn't out there. So that makes this suspect and says your conclusion that light sweet crude is going to drop is more likely the case out here. But right now, the mere fact that it was deflected at about this 46.90 area, both yesterday and today, didn't get up totally to it, but it's just another indication that right now it is sellers that are in control. So I'd be watching for that 0.618 retracement level. And if we see something different, if we see light sweet crude turn around and take out some of these areas of resistance, well, then that might be your signal to go ahead and go long as well.
Okay. Well, I appreciate it.
You bet. Thanks so much for calling. That was Jim in Oldsmar. And, we spent a lot of time there on taking a look at those things. But really, when you're getting into any kind of trade, you've got to do that, right? You gotta. Yeah, what kind of grammar is that? But you really should understand the influence. You got to understand, here we go with the gotta again, but it's so important to understand what is going to influence the equity, if you can find an influencing factor. And that way you can also pay attention to it. Not everything's going to have an influencing factor out here, right? It's like if you're going to trade the QQQ series ETF as an example, let's do this. What you want to do is you want to make sure that you know what the top 10 holdings are doing inside the QQQ. Why do you want to do that? Well, because 10 out of the 100 equities, it's really 10 out of the 105 equities that make up the value of the Qs represent 49.77% of the weighting structure inside there. And, and that's so that Apple is number one with 10% now, Microsoft with the devilish 6.66% out. No, Microsoft is 7.89. It's Amazon that is the devil right now, 6.66%. Facebook, 5%. Google is really about 9.5% when you put both classes of shares up there. Intel 3, Comcast 3, Cisco, and an Amgen being the 10 holdings within inside of the QQQ series. I'd say it's also important to understand what's going on between the equal weighted ETF and the Qs out here because it's so weighted. And as an example, if I go ahead and I open up that file, and the Qs have been getting the raw end of the stick out here from folks that believe the Qs are laggards out here. Now, the reason I say that is because we want to take a look at what's going on inside of the equal weighted ETF. That's where each of these 105 positions are equally weighted. So are the Qs are, in fact, when you can see what I believe we're going to see here is the chart with the equal weighted, which happens to be up on top, versus the weighted ETF out here. You can see that this thing has been able to get above its highs from June 2nd. In fact, on the equal weighting series, price is getting all the way back to the December 29th area. Now, why is that important, December 29th, if you were going to be trading the Qs? Now, in this case here, you can see the equal weighted is stronger. You might say, well, how do you make that determination, Steve? Let's put a yellow line. Here is the equal weighted from December 29th versus the weighted series. 44.27 or right thereabouts is the equal weighting high from December 29th. You're trading at 43.71. You're only about 50 cents away. Versus you're trading at 111.41 in the Q series, the ETF versus 114. So those that believe that the QQQ series is the weak link out here, look from a weighting structure, yeah, those top 10 are maybe not performing, but I can tell you the other 90 or the other 95, they're performing fabulously because they're already back towards their December 29th high. Now, why is that important inside of the Qs? I asked that question earlier. We're going to go find out. The reason that is important is because, let's do this. Let's go over to this page right here and put it up. Is because on December 29th inside the Qs, it created an island top pattern. That was the trading sessions from December 29th and December 30th. And that's going to be a real key area to be watching. But, things inside the NDX 100, inside the equal weighted series inside the Qs, looks mighty healthy to me. This is Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up about 8 points out here. We've got an email that came in from Michael, and Michael is interested in the XLF. I suspect we will go sideways until bank earnings, and it's a coin toss, buy us up, beat forecast by a penny type of thing. What do you think? So let's go take a look at the XLF, and let's do it utilizing a couple of different tools out here for Michael. So let's first start with this chart. Look at a clean chart for the XLF. We can take a look at some volumes, get a feel for where things are trading into. And right now today, you've got a sideways day inside of the financial sector. Volume so far today, about 22 million shares. Yesterday did 44 million. It is dealing with the high out here from the trading session of June 23rd. That was pushing higher with about 59 million shares out here. If we just take a look at retracements inside of the financial sector from its most recent high to low, you can see it's paused here right at that point, 786 retracement. So it's not really giving us a ton of information. It is a floor. It is an elevator floor when we take a look at our Fibonacci sequence numbers out here. So it's a logical place for price to just kind of move off to the side. If, in fact, the XLF continues higher, and we're going to try to determine whether or not it looks like that's what the outcome is going to be, then price ought to go target that 23.93 level, and that is the high from May 31st. Now, let's go put this on a weekly time frame, see if there's any kind of weekly information that we can garner from the XLF. Let's get rid of that retracement level. Let's see what we were doing last week as price was pushing higher. Light volume, 194 million shares out here. The swing point, which it's trading into this week, this is a swing point that began May 30th. That had 157 million. We're at 101, and we are basically halfway through the trading week, right? We're 144 in the afternoon. We've been trading for, what, 2.5 days? So if you take a look at 2.5 more days, we know that the XLF is pushing into a swing point with volume. Now, I'm just going to do some straight line math out here and say you're going to do more than 157 million shares out here. Now, the low of that swing point, a rejection would be a close under 23.26, but you'd have to do it with less than 157 million shares. So at this stage, the XLF is pushing into a swing point with volume volume until it rejects that level. When you push into a swing point with volume, even if you don't, as long as you close inside it, again, that number 2326 says you would go test the high of 2393. So, Michael, that's what the weekly chart is communicating to you and I. Now, if I switch over to one of Stevie's other charts out here, you're going to see some squiggly lines on my screen. You're going to see blue, green, and red come together. We also see we see our TAS daily market profiles, and trading above 2313 is certainly bullish because it's cleared all levels of resistance. So that's the financial sector. Now, ideally, the best thing that could happen, believe it or not, inside the XLF would be for it to pull back. The most bullish case, the most bullish thing out here just would be for price to pull back as these three lines start to come together. I'm not talking about necessarily today, but over the course of the next couple of days out here, if in fact that convergence takes place like it did right out here, right around June the 20th, see how price was coming back into that convergence, and then price continued to move lower out here. We have the exact opposite, potential opposite pattern that could be forming. Support inside of XLF and any move lower, 2313 is certainly one spot, but 2278 as we speak right now would be the next spot that I would be looking. But as we take a look at the daily chart out here, all things look bullish inside of the XLF. We know that it is pushing higher with volume into its weekly swing. So, Michael, I hope that helps you out. You didn't indicate whether you were in a trade or not, but that is my take and view on what the XLF is doing as we speak right now. Perfect. So thanks for that question. What should we? So we've looked at light speaker. We haven't taken a look at gold. I did get an email also about gold. So, and if we, this is, I've maintained. I believe I've maintained this position here. Let me put this chart up on the screen. We won't see metals start rocking and rolling to the downside until we get both of these guys or gals to participate. And when I'm referring to is both gold and silver. And it's got to be one harmonic move. I don't even know what that means. It means they got to both break below levels of resistance in order to do that. Now, gold has done it. Gold broke through a level of resistance yesterday, which is priced out right now at about, it's not too much above where we're at. It looks like about we'll call it 1350. You're trading at 1344 right now. You get above 1350, and then it's going to join silver, which is down at the bottom of the chart. And its level of support is 1986. Until we see both of them below Stevie's red line out here, expect chop, expect indecisiveness with regard to metals. Now, my take on once we get that decisiveness to the downside, it's just like gold and silver went higher and farther than many thought out here. You're going to see the same thing to the downside. And the period of time to the downside, let's see, now is what, July 13th. We're not there yet. But when we do get there, August 13th? Nah. September 13th? Nah. I'm looking at a forecast out into October once we start to see things move to the downside in both gold and silver. But we're not there yet. So all of that vision into the future is really hogwash right now. But when we do get that, that will be Stevie's take as to the extent of the move lower inside of gold and silver. But we're not there yet. Inside of the GDX, if we take a look at that, we'll put that up on the screen. That is not in any kind of bearish mood as we speak. There is no reversal signal. Let's go ahead and count the waves off of this low out here from May 26th. Nah, it made an 8th wave move, which doesn't really exist, not in the way that we take a look at it. Just a couple of trading sessions ago, it looked like yesterday it was getting ready to crack, got below that red line on my chart, but you need to see some follow through, and in this case here, no follow through whatsoever. If we go take a look at volumes, let's go ahead and put this chart up on our screen out here. So the miners are not giving us any kind of a bearish move out here. If we take a look at what the GDX is doing volume-wise, its most recent high, that took place out here on the trading day of July 11th, 46 million shares. Now you're moving higher with lighter volume, about 29 million shares today. It's probably similar straight line, maybe slightly lighter, but not too bad looking. But in the GDX, we got to see all these simultaneously moving to the downside, and they're going to have to get below Stevie's red line that is drawn in the sand. Okay, so we got the Dow up 17, the S&P is flat, NASDAQ Composite off 4 points, Russell 2000 down a couple points as well. We've looked at the financial sector. I'm just going through my mind. We've looked at the energy sector. Let's go take a look at the numero uno sector. Let's go take a look at technology, XLK, and then we'll go look at some individual equities out here. So what do we know about the technology sector, the number one weighting structure inside of the S&P 500? Well, this thing is above its highs out here. The high certainly back on the trading day of December 4th. Looks like it is above its highs out here from the trading session back on April the 4th out here at 44.73. Now that high had volume of 7.6 million shares. Moved into it yesterday with 16 million shares. Boy, that is awfully strong. Today, you've done about 4.5 million shares. So the energy sector is looking mighty, mighty, mighty fine out here. We'll put the, does that mean we're at all-time highs out here? Let's put the weekly chart. And in fact, we are. The energy, the number one sector inside the S&P 500. Of course, that would make sense, right? The S&P is at all-time highs. Steve Rhodes with TFNN. We'll be right back.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So let's go take a look at the chart, by the way, that we're looking at on my screen, SHA charts. The left-hand side, New York Stock Exchange, the one next to that, NASDAQ Composite. The one next to that is the Dow, and then the S&P 500 to the very right-hand side. Now, all of the advanced decline oscillators out here are in the overbought territory. And so we're starting to see, with some sideways movement, we're starting to see that overbought condition worked off. Overbought conditions get worked off two ways, either by a decline or by moving sideways. The most bullish is a move sideways, and that's what's underway right now. Now, the only real signal here to be cautious of as we speak right now, this is as a 154, and we switch over here, is really inside the NASDAQ composites, UNPQ. Let's go ahead and put this up on the screen. Now, the reason why I say that is when we take a look at, now the NASDAQ composite here has a island top reversal. That took place just like we looked at inside the Qs, inside the NDX 100. So we look at December 29th and December 30th. Now, most of these islands across the board have begun to fail, like the New York Stock Exchange out there. But we can see that that still is an area of resistance. At least it's an area of resistance inside of the NASDAQ composite. 50, 65, 85 is the number. Now, we can see that intraday today, we have seen the NASDAQ composite exceed both the high and the low of yesterday, and we're trading at least one tick to the downside. We're trading more than that. You've actually got a nice little bearish engulfing candle that is formed right here at an extended condition. Now, we don't have any other pattern inside of the NASDAQ composite that I can clearly see, other than the mere fact that we are making our way up to resistance, and this is showing that it is resistance that needs to be respected. So what does that say? That says to me that the work off of the overbought condition has begun. It's 2 o'clock in the afternoon. I don't know how the day is going to end out here. I would venture to say if you see a close below 21.4250, 21.4250, that's the number I would write down on your pad of paper. If you see a close below 21.4250, and that is on the ES Mini out here, then that says to me that the sideways move is going to start turning into a pullback. And a pullback to where? You know, at this stage, the best thing that we can do is take a look at retracement levels. And retracement levels from the most recent low to the high out here, and inside the NASDAQ composite, we'd be looking at about 48.59 as that first level. 48.59 versus 50.36, that's what, about 100, that's almost 200 points, 48.50. Well, it's not 200 points, but it's in that range, you know. And what people would say it's all over. Remember, we've had a nice accelerated move off of the lows out here, and it is time for this overbought condition to get worked out. But what happens if we don't close, or the ES Mini doesn't close below 21.42 or doesn't trade below that level all night long? Then the market continues to move sideways to higher out there. That is the line of demarcation that you want to be paying attention to. Again, it is 21.4250 or 21.43 as we speak right now. I don't know whether it's going to crack below that. I know what to be watching for. I don't know whether it's going to crack below that. If I take a look at just simply we'll use one of Tom's techniques out here. We'll just switch over to a 10-minute chart. What we know right now is that the swing point that formed, and this is at 11:50 this morning, had volume of 29,000 contracts. We're pushing in towards that. We haven't actually hit it. The top of that is 21.42 and a quarter out here. We've got 2 minutes to go. We're pushing down into it right now with light volume. So there's no message here, but watch the 21.4250 level, and that's really all I've got. But you know what? I know someone who's got a lot more for you, and he is our resident polar bear. And that's Mr. David White. So stay tuned for David's show, and then we've got Tom O'Brien from 3 to 5. Have a wonderful Wednesday, and I'll see you on Terrific Thursday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.